in our presentation today, we will briefly explain how big data analytics affect customers, the benefits and risks of using cloud-based solution, an alternative way to deal with Bank X technology challenges, and also why data quality is so important for analytics success.
Now we will discuss the positive effect of big data analytics on banking customer. First, big data analytics enable banks to provide personalized product and service. By analyzing customer transaction data, demographic information, and behavior patterns, bank can offer loans, credit card, insurance, and investment product to suit customer needs. This improves customer satisfaction and enhance the overall banking experience. Second, big data analytics improve credit assessment and speed up loan approval. By using a wide range of data such as payment record and employment information, banks can make more accurate and realistic credit decisions. As a result, customers benefit from faster loan approval and fairly evaluations. Third, big data analytics enhance fraud detections and transaction security. Through the real-time analysis of transaction pattern, banks are able to detect suspicious activities early. This helps prevent financial losses and increase customer confidence in digital banking. Finally, big data analytics improve service efficiency. It reduces response time to customer inquiries and allows banking service to be delivered and more smoothly and efficiently. Next, we will look at negative effect of big data. One major concern is data privacy and confidentiality. Banks collect and process a large amount of personal and external customer data, which raises concern about how this data is used, stored, and protected. Any misuse of data can lead to the loss of customer trust and confidence. Another issue is risk of bias and inaccurate decision making. If the data used for analytics is incomplete, outdated, or of poor quality, banks may make unfair decisions. This can result in loan rejections or unaffordable pricing for certain customers. Lastly, there is a lack of transparency in automated decisions. Big data analytics systems often function as black boxes, making it difficult for customers to understand how decisions are made. This may cause dissatisfactions and perception of unfair treatment.
In this slide, I will summarize the additional benefits of cloud computing for big data analytics based on the case study. First of all, cloud computing offers scalability. Big data analytics requires high processing power, especially real-time transaction and customer behavior analysis. Cloud services allow storage and computing power to be scaled based on demand, helping banks manage growing data volumes without investing heavily in new infrastructure. Second, cloud computing improves system flexibility and data integration. BankX currently use multiple legacy systems with different data formats, which creates data silos. Cloud platforms help integrate data from various sources and make it accessible across departments such as marketing, risk management, and operations. Next, cloud computing is cost-effective. Traditional systems involve high initial costs and long approval processes. Cloud services use a pay-as-you-use model, allowing BankX to implement analytics solutions faster and adjust resources based on actual needs. And finally, cloud platforms support advanced analytics such as real-time processing and machine learning. These tools improve fraud detection, customer profiling, and risk assessment, supporting better data-driven decision-making at BankX.
Am I agree with Ahmad? Yes, I agree with Ahmad, the CEO. His concerns are valid because even though the cloud-based services offer many benefits, the risks must be identified so that they can manage properly. Ahmad not rejecting technology, he just being a responsible leader. The first risk of adopting cloud-based services is data security. Data stored in the cloud is exposed to cyber attacks. If the data leak happens, it can weaken customer trust. And once the customer trust is affected, the bank reputation will also decline. And the second risk is regulatory compliance. Every countries have different rules and regulations. For example, bank X may use a cloud provider in the US. And in the US, it is legal for the provider to transfer data to server in other countries or the third countries. However, in Malaysia, such practices are not allowed. Therefore, even if the action is legal in the US, Bank X still has to bear the responsibility for any regulatory breach in Malaysia. The third risk is operational dependency. Relying on a single cloud provider can reduce Bank X's control over its IT operation. For instance, if there is a system disruption or if the provider changes its service term, this can directly affect the bank daily operations. And in this situation, Bank X has limited control over the issues. And lastly, Bank X's existing legacy system remain a challenge. Migrating from old system to a new cloud-based services is time-consuming and costly. If this process is not managed properly, it may result in data corruptions. So, in conclusions, although cloud-based services can bring many benefits, Ahmad's concerns are valid, and cloud adoption should be done carefully and cautiously.
Hi, my name is Nurul Husna, matrix number 297481. I will continue with alternative solution to address Bank X legacy system and complex work environment. An alternative for Bank X is legacy system modernization using middleware and API integrations. So, what are the middleware and API? Middleware refer to the software that act as a bridge between old and new system by translating data formats and enable communication between systems that were previously incompatible. API or Application Programming Interface provide a secure and standardized way for this system to exchange data efficiently. This approach suitable for Bank X because many of its core banking systems were developed over the decades and contain highly sensitive data that are too costly and risky replacement. By using middleware and API, Bank X can integrate fragmented legacy system without costly replacement or disruption to the daily banking system, while standardizing data flow to support modern analytics. In addition, keeping data within Bank X's internal environment will strengthen security and regulatory compliance. Overall, middleware and API integration offer a secure, scalable, and regulation-compliant solution to address Bank X's legacy system and complex work environment challenge. Continue with the importance of data quality for Bank X. As known, data quality is critical in a big data analytic as it directly determines the accuracy, reliability, and usefulness of insight for decision making. In the banking sector, high quality data that is accurate, complete, and timely underpins key functions such as fraud detection, credit scoring, personalized service, and regulatory compliance, all of which are essential for Bank X's financial stability and customer trust. Conversely, poor data quality can mislead analytics, increase operational and regulatory risks, and reduce customer confidence, particularly as Bank X depend on large volume of data accumulated over decades of legacy system. Even a small inconsistent can result in serious consequences, including inaccurate risk assessment or failure to detect fraud. So, to address data quality issue, Banks Act should adopt a structured data management approach. First, strong data governance is essential to establish clear data standards, define ownership, and ensure accountability, thereby improving data consistency and organizational trust. Second, data cleansing and validation tools should be implemented to correct inconsistencies, remove duplicate records, and detect any missing value before data is used for analytics. In addition, continuous monitoring and regular regular data quality audits allow early detections of issue and support long-term data integrity. Finally, staff training and awareness programs help reduce human error and promote proper data handling practices. Overall, this strategy ensures high-quality data that enable more effective analytics and better decision-making at a bank X.
Okay, to conclude, big data analytics can bring many benefits to Bank X, such as better customer experience, more efficient operations, and also stronger risk control. At the same time, it also comes with challenges, especially it related to data security, regulatory compliance, and system integration. Although cloud-based solution offers flexibility and advanced analytics, the CEO's concerns are reasonable given the sensitive nature of banking data. An alternative approach like using middleware and API to modernize legacy systems allows BankX to improve analytics without fully relying on external cloud providers. In the end, technology alone is not enough. Strong data governance and good data quality are essential for Banks X to use that big data analytics effectively and responsibly. So that's all from us. Thank you.